Dave Kranzler of Investment Research Dynamics. I ask you, is the gold and silver correction over? Hello there, my friends. Chris Marcus here with you for Arcadia Economics. There is handsome Dave Kranzler joining me for the weekly silver and gold market update. Dave, pleasure to have you on here today. I know you're getting a haircut in a little bit, though, although I think you kind of look pretty slick today. Like you're like the Joe Namath of the silver world, bringing a little character and flair. You're like a bad boy of the league. You do whatever Dave wants. Don't take questions from anybody. Is that capturing it right?
Pretty much.
Your fan club wants to know this, by the way. I'm not
a Jets fan, by the way, but I do like Joe Namath.
Yeah. Well, I know you're getting excited about my plan to buy the Jets, Dave, aren't you?
Good luck with that.
Well, each day I wake up and I think, what can I do today that will bring me one step closer to owning the team? And actually, the fact that they're getting blown out by halftime of every game, I think is working in my favor. Then when I submit my resume and my package, I'll be like, I know Dave Kranzler. Like, oh, let's sell to this guy. So I imagine how that will go. So hopefully your Broncos can get it together.
They are getting it together. I'm quite excited to see them play Kansas City this weekend.
Maybe you can win a Super Bowl before the silver reign of the Jets takes over and dominates the league for a while. Although
the Broncos have 3 trophies, Super Bowl trophies at their headquarters.
Yeah. Are you rubbing that into how we only have one in Jets alleyway?
Yep.
Well, that's why I'm taking over the team, baby. Come on, man.
Good luck.
I hope your game is a little sharper for the gold and silver questions. I'm laying this out clearly here, but I know that is your area of strength. That and the tennis court. Maybe we could mic you up and you could give gold analysis as you're smashing on the Keynesian opponent. Do you go more forceful in your tennis match if the guy you're playing against, if he's like a mining stock journal subscriber, you go a little easy on him, but if he's mouthing off saying oh, conspiracy theories with gold and silver, and you just
we don't talk about that nonsense on the tennis court.
Yes. Well, some good nonsense that we can start this one off today. The theme today is the gold and silver correction over yet? Although I just can't resist. I'm lacking self-control here because when I see CNBC front page article, a Fed official who could be Biden's Treasury Secretary says Congress needs to pass stimulus to save the recovery. What are the chances that Biden, if he does have a Treasury Secretary one day, that such a person would be a Fed official who's issuing a call for more fiscal support from Congress? And Dave, did you know the recovery remains highly uncertain and highly uneven? Big time analysis by the central bank. I would dispute that. There's nothing uncertain about it or uneven. There's no recovery. There's just printed money. So I don't know. That seems incredibly clear to me, but you're Dave Kranzler. So what do you think, sir?
To be honest, I didn't know that Brainerd's name was thrown out there as potential Treasury Secretary, but she's a voting member of the FOMC. So honestly, to me, something like that would be highly troubling because allegedly, theoretically, the Fed is supposed to be completely independent of the U.S. government. So moving a voting member into the leadership of the Treasury and the IRS, to me, would be an extremely troubling development. In fact, I honestly think something like that should be prohibited. I think if you have any connection with the Federal Reserve, it should take you out of the pool of people who are available to be made the Secretary of Treasury.
So kind of along the lines of how Jamie McDonald of the CFTC, maybe there might be well served to have a rule that he can't go work for an investment bank now.
That'll never happen.
Although, Dave, I'm a little disappointed, I have to say. I'm going to dispute the political and central bank independence. I know they
Oh no,
talk
it's
about.
not independent. The Federal Reserve is it's part of the entity that's affectionately known as the deep state that really controls policy. I
With the
mean, they
IRS.
control the money supply. The Fed controls the money supply, so um, they don't care about laws. They don't care about rule of law. They don't care about politicians. So
Yeah.
moving her into the Treasury Secretary position would just further cement that status.
Yeah, although I don't know. I think the cement's already dried on that one as it is. It was funny. I was reading
Oh, I agree. I agree.
in Paul
But
Volcker's autobiography. He mentions, I think it was James Baker, and possibly I'm getting that name wrong, but basically Reagan had a meeting with Volcker. Reagan sat there, didn't say anything, but one of his guys, I think it was James Baker, basically said, "Don't raise rates till after the election." So, I mean, and in the end, they're sitting there, and there's people on CNBC and Fox News getting all the independence of the Fed. Give me a break. They all want to print money. They're going to print money. The politicians want them to print money. The Fed bankers want them to print money. And Dave, you know what they're going to do?
they're going to print money.
There you go. So I don't know anything about Fed Brainerd, although a lack of more fiscal aid is the most significant downside risk in her economic forecast. Well, now I know enough to think that I was going to say that I just don't care. That would seem a little bit rude phrasing, but I guess it's true because in the end,
Hey,
we're just covering this.
Atlas shrugs.
Yeah, because lack of more fiscal aid, most significant down. So if the economy was so strong between 2010 and 2018, where they tried raising rates and it collapsed, so if that wasn't the time to pay down the debt, if that wasn't the time to actually undo some of the monetary burden, is it possible that that's just not part of the plan? Or maybe that is the plan, that there is no plan.
No, it hasn't been part of the plan since Nixon closed the gold window in 1971. I mean, all you got to do is go to the St. Louis Reserve Fred database, and you can run charts that go back to 1971, and run a chart of the money supply. Technically you should use M3 up until 2006 because that's the best real measure of the money supply. But you can use M2 because then you'll get a continuous chart since they stopped reporting M3.
The numbers got too big for the Fed spreadsheet, so like shit, we can't.
No, you know what the excuse was? They said that it was not much meaningfully different from M2. And the cost of compiling the data wasn't worth it. Well, what's it's the biggest cockamamie excuse I've ever heard. And you're talking about an organization that spent millions fighting the audit the Fed bills, when Ron Paul would float them in the House Financial Services Committee. So, it was total BS. They hit M3 on purpose. There's no coincidence they stopped reporting it in mid 2006. And 2 years later, all of a sudden they start printing money like it's going out of style. So, but anyway, needless to say, if you run charts, just run a chart of M2 and federal debt that goes back to 1971. And you can see there's never been any intent to pay down the federal debt or balance federal spending. I mean, it's essentially, an insidious silent wealth transfer mechanism, and we're seeing the very end of it right now. In terms of, I just saw a statistic: the 50 richest billionaires control more assets or have more assets than the bottom 65% of the United States. Now that relationship, the 50 richest people in the United States in 1971 did not own anywhere near that percentage of the wealth relative to the rest of us plebeians.
I
Or
hear
should I
you.
say we plebeians?
Yeah, and I mean this chart. Here's the monetary base. I do love that they just stopped printing the M3. Why would that be important? But you see, basically, Fed inception in 1913. So the first 95 years. See here you have the Y2K thing. There's a little hump there. I like how we used to point to things like that. Wow, they just
Just
bumped up the money
reset your
supply.
left side to 1971 because then it's even more dramatic.
Huh?
Reset your chart to 1971.
Yeah, I want to
Go,
skip
take
to
the
60.
cursor over to the left-hand side.
I'm getting there. I'm struggling with. Wow, even this.
No, go take your cursor down to the bottom of the chart below 1960. There you go.
Yeah, did it my way. So, I mean, it's incredible. You see, I mean, we thought they were printing a lot of money. Here's back 1980, where
The
gold hit.
monetary base isn't is it doesn't capture everything. You use M2. Use M3 until it stops. Anyway, it doesn't matter. The audience can do that.
Well, I guess the point is that you see, I mean, 95 years in, and then people are saying, well, gold hit 2000. It's a
Boom
bubble.
goes
I
the
mean, look
dynamite.
at this. So, Dave, anyway, gold did hit.
I mean, what you're seeing there is starting to approach Weimar-esque on scale. We're not there yet, but it's getting close. I mean, they've devalued the currency by about 98.5% since 1971. I believe that's about right. Just just take where's gold right now? Just take 1900 or 1896 and divide it by 1931, and that's the degree to which the dollar is devalued versus gold. That last 1%, they're going to have to that line that you just saw is going to continue going straight up, and it's going to go straight up several multiples of what it went of the straight upness since March, and that'll be the complete destruction of the dollar.
Yeah, and Dave, when you look at the old gold price from 1971, do you want to? I'm going to do a calculation here. You want to use 35 or 42? I know it was kind of like that two tier. Which number would you like to use for this one?
It doesn't matter.
All right, so we'll take
You're talking
19.
about a $7. You're talking about a $7 difference, dude. and
Well, with
and in
that,
in the Weimar period, right before the collapse, I think that final leg of collapse where they just went completely, they took the money supply up to Pluto. I think that was really pretty much in the last 6 months before the mark completely collapsed. So we still
yeah.
have a lot of fun ahead of us.
Well, it's interesting to think, Dave, because 1926 divided by 35 means that since 1971, gold is a 55 bagger.
Yeah.
So if let's say gold, which is not to
Not
say
bad,
that
huh?
which is not to say that it will happen, but if between 1971 and today it was a 55 bagger, plus you have COMEX contracts stuffing the price, and now the Fed is blowing what happened over the last 50 years out of the water. If you take that 55x multiple times the current gold price over the next 50 years, that gets us to 105,930. So again, we've seen gold go over 2,000 bucks this year. It came back down, been rallying the last couple of days. So Dave Kranzler of Investment Research Dynamics, I ask you, is the gold and silver correction over?
I mean, why, is it a correction? Do we have a correction? Doesn't CNBC define a correction as a 10% pullback, a 10% decline? Well,
Dave,
I guess
I'm
gold's
proud
probably
to.
declined. Gold's probably come down about a little over 10%, I guess. So I guess by CNBC's definition, it's a correction. I mean, what I would suggest is that, the price of gold ran up like what, 35% between March and early August, and there's been some profit taking, by the short-term oriented people. So, um, and that caused some weakness in the market, some sell-off. And actually, I guess I would say that it was a corrective pullback that was healthy, and that's going to set up the next move higher. I happen to notice just today, gold has, at least for now, popped right back over its 50-day moving average. So that's a good sign, but we want to see that hold. I mean, anything can happen in the short term, especially when you're talking about the amount of intervention that's been going on in the market. I mean, they've been using both paper derivatives and the London price fixing mechanism for the last 4 to 6 weeks to try and keep a lid on the price of gold. And what I think is going on there is, I think, and this is in conjunction with, say, over the last 2 or 3 weeks, every single frickin' day, we have like several Fed heads coming out, people like Lael Brainerd coming out and giving speeches and telling us that, oh, the government needs to do more with stimulus. Well, how the hell is the government going to fucking pay for that unless the Fed prints money to fund the new bond issuance? And so they're basically, doing the spade work, prepping us for the next round of money printing. And in conjunction with that, the banks, regardless of what some of the big banks like JP Morgan and Bank of America, they made these, propagandist boasts that the economies look great, blah, 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 when they reported their numbers. Well, of course they rigged their earnings numbers by taking minuscule provisions for credit losses. But Synchrony Financial reported yesterday, and they had huge credit write-offs. And that's really a better snapshot of what's going on beneath the surface at the banks. Their balance sheets are deteriorating again. So when the banks come out and say things are really good right now, it's just a cover story for the fact that it's deteriorating beneath the surface. It's the portrait of Dorian Gray. And so what's going to happen here is the Fed's going to need to justify another round of money printing, because it's going to have to reliquefy the banks, and it's going to have to fund the new Treasury debt issuance that's coming, over the next 6 months. So all of that is just a long-winded way to say that I don't know if the weakness that we've seen in the precious metal sector is over right now, but I would say over the next 3 to 6 months, we're going to see much higher levels for gold and silver. And I think, in the last 24 hours, silver's been on an absolute tear. And that's not momentum chasers chasing it. I believe that's long-term fundamental accumulators accumulating physical silver and pushing the paper price higher.
Yeah, and there we see, we're recording Wednesday today. We see silver has been up quite a bit the last 2 days. Although, Dave, what happens to the gold and silver price if the new president starts paring down the debt load, starts paying off the debt? Why are you laughing? I'm serious.
Come on, man. That's not even a valid question.
And if the new president appoints a new Fed emperor who starts unwinding the balance sheet, wow, it looks like the debt clock, the numbers are going so fast, it's taking my computer. We're up to 27.1 trillion. So Dave, what if, but I'm on favor of silver and gold, obviously, but what if that happens? If the next president brings the debt, let's say, a real fiscal hawk, which I'm sure both candidates are, brings it down to like 15 trillion, and the Fed unwinds its balance sheet, gets back to pre-2008 levels, what would happen to gold and silver?
Hey, Chris.
Yes, sir.
Regarding this question, it's the same thing as me asking you, what would happen if an alien spaceship from another galaxy landed in your backyard tomorrow?
I think the odds of that are actually a lot more likely than what I posed.
I believe that's correct.
Yeah, I mean,
I concur.
I'm being a little bit of a smart ass asking it, but I mean, I did a video earlier this week of what's really what is the risk to holding silver? Or, same thing applies to gold. But I mean, to me, that's it. Like something that's impossible because Dave, would I be correct that let's say there was a president who did try to pare down the debt and a Fed chairman that did try and raise interest rates and stop printing trillions of dollars out of pop? To me, that was what.
Gold and silver have had their best periodic rate of returns when interest rates are rising. You can go ahead and look at the data, or you can Google uh, Adam Hamilton. Is that his name? Adam Hamilton, I think. And he's actually done the statistical work on it, and he's taken it back to, I believe he took his numbers back to like 1971 or the early 70s.
I mean, but are we in agreement that if they ever even attempted to do that, you would see all of the markets crater under the weight of all the debt that has?
And they can't do that. We're past the point of no return on that. They have to. All they're doing right now is they're doing what they can to keep the gerbil spinning on the, moving its legs and keeping the wheel spinning. They're injecting it with meth, cocaine, amphetamines, everything they can to keep that thing spinning, because that's how they're extracting wealth from the system. I mean, look at all the corporate insiders that are just unloading record amount of shares into corporate buybacks, and that's just for starters. So the level of greed and corruption is at unprecedented levels for this country, and it's all a giant money grab. And the only way that they can, the best way for them to grab as much as they can while they can is to do what they're doing: issue debt and print money. And that's what we're seeing.
It's funny you said the level of corruption is unprecedented in this country. This is where we have a track record of like Nixon, Hoover.
Nixon was like, that's like a kid in the candy store compared to what's going on now. Now you're looking at heroin junkies in a South American field of opium poppies, doing their thing.
Well, you got to raise revenue somehow. Although Dave Kranzler, let's say that, I got written in as president. I got to choose the new Fed emperor. You know who I would pick?
Andy Schectman?
Oh, come on, bro. Great man in his own right. But the only qualified person I would even attempt to have on this job is the hot shot that writes this.
Stop. I wouldn't want it.
That gets delivered to my inbox. I don't have to go anywhere. And now as I think about it, Dave, it's great. I don't even have to type anything. You make it easy so it comes to the inbox. I can just click, which is important. We can't expend too much effort trying to invest the lazy man's way and have great success. And for just $20 a month, you send this out twice per month. You get a copy of this, Dave? This thing is good, man. You should read it. Look at I've showed you before now. The only way it could be better is if there was some silver in that truck rather than that fiat. But Dave, what do we got coming in the Mining Stock Journal? Give me a taster. Give me a snippet. What might be?
No, I rolled out a great new idea for me anyway in the last issue. So I haven't. This is my off week, is when I do all my research and hunt down for new ideas. And I've only partially conceived of what the next issue is going to look like. I mean, it will be good, but obviously, I do say so myself.
I like some modesty is included in each episode. No extra charge. Although, Dave, maybe you'll go out to your hot tub this afternoon, and that's where I hear the good ideas come from. And by the way, Dave, I've been hot tubless. If you include the hot summer months in Denver, it's really been since like April. And now I'm traveling, auditioning cities to find my new home. So maybe, who knows, I'm on my way to Texas. Maybe I'll swing by, hop in your hot tub, get the scoop of what's coming on the Mining Stock Journal. Although, Dave, I know that's an exclusive club. So fortunately for anyone who wants to read it outside of your hot tub, which might be a little bit more normal, where's the link for that one, Dave? Where is it? Oh, no, again? Shot there, Big Slick. Come on. There you go. You got a little control there. I mean, I know your brain's working overtime finding the mining stocks that we should invest in, but anyway, sir, I appreciate you joining me as always. I guess in a couple of weeks we'll be able to make jokes about the new Fed. Maybe there'll be a new Fed emperor, new president. Who knows? But I think it's safe to say if you bet on the printing press going overtime, regardless of who wins, you're in safe shape there, right?
Absolutely. Gold and silver and the mining stocks are the biggest no-brainer trade I've ever seen.
Yeah, well, I think so. And Dave, I know your pick for Fed Chairman Andy Schectman, who, by the way, is running.
Well, I didn't say I would pick Andy, although he's more qualified than anyone that's been in that office since I've been alive, or more qualified than Lael Brainerd, that's for sure.
Yeah, plus he's offering American Silver Eagles for $4.79 over spot, which
that's a good price.
Find out more about at Arcadia at milesfranklin.com. You can call your buddy Yara, order some today.
I might just do that when we're done with this.
Yeah, and even better for everybody else watching at home, if you want to hear what Andy Schectman has going on, what he's seeing on the physical. Oh wait, what's he got there?
It's an unopened box of Silver Eagles.
Wow.
Got delivered a couple of weeks ago when price of silver was lower, and I've just been too lazy to open it. But maybe I need a few more of those.
Yeah, or if you need, I'll come help you open it and store it somewhere safely. I could do that.
Right.
I'll swing by. Anyway, Dave, appreciate you joining me. And for everybody wondering what is happening on the physical level of the markets, well, that is coming your way now.